When we talk about AI and your money, there's one question that seems to be on everyone's mind.
Is AI in a bubble? And, it's a totally fair question to ask.
But for an investor, it might actually be the wrong one.
The real question is, what happens to your money if all this hype just fizzles out?
History actually gives us some great clues. Just think about the railroad boom.
Or, more recently, the internet. Both of these technologies were completely revolutionary, right?
And yet, in both cases, investors got swept up, overpaid, and ended up losing a ton of money.
This Howard Marks quote just nails it. It's not bad ideas, but good ideas with way too much hype. So where's this risk hiding in your portfolio? Well, it's probably right there in front of you.
Right now, almost all of that AI exposure is packed into a handful of big U.S. growth stocks.
Which means your so-called diversified index funds, well, they might not be so diversified after all.
This gets us to what real diversification is. And hint, it's not just owning a bunch of stocks.
It's owning things that zig when other things zag. That's the whole point. A truly well-built portfolio isn't trying to predict what's next. That's not the goal.
Instead, it's designed to work no matter what happens, to survive a lot of different possible futures.
This means looking at things like small caps, value stocks, and international markets.
And hey, it's not just about stocks. We also have to talk about bonds and cash.
Their job isn't to make you rich. They're your portfolio's defense, your risk management tools.
So, this all comes back to a really key idea. Trying to predict bubbles is just not your job. Because let's be honest, timing the market is a fool's game. It's nearly impossible to get right.
So the answer isn't about having a crystal ball. It's about having a better process.
And look, building a portfolio like this isn't about being pessimistic or betting against AI.
It's really an act of humility. It's admitting you don't actually know the future, and that's okay.
So I'll leave you with this question. Is your portfolio built to predict just one future or to survive many?